Although oil has advanced slightly, setting above $96 per barrel, it continues its sluggish move around $95. In fact, this is the fourth day the quote has been trading sideways, posting both mild gains and losses. Moreover, this is despite extreme temperatures in Europe, where energy infrastructure is starting to strain under intense heat waves that have gripped some regions. For instance, air conditioners cannot cope with the sweltering heat back in much of Spain. The heat wave in Europe has built pressure on energy systems, leaving the region with no reserves for the upcoming heating season. So demand for energy will obviously grow. Thus, range-bound trading in the energy market stems exclusively from anticipation of tomorrow's data on inflation in the United States. Until then, the market is likely to remain unchanged. Now let's take a look at the trading chart. When pulling back from the support level of $93 per barrel, Brent crude oil futures managed to add about 4% and reach the $97 mark. Despite a slowdown in the pace of the downtrend, it's still relevant in the market. That's why traders are still anticipating a gradual increase in the volume of short positions. The first sell signal will be generated after the price returns to the support level. A continued downward movement will be confirmed after the price fixes below the level of $93, at least on the 4-hour chart. There is also an alternative scenario. The current pullback may well turn into a full-fledged correction. So thus, if the price consolidates above $97.50 on the 4-hour chart, the way to the area of $100 or even $102 will open. Meanwhile, gold managed to gain value. The yellow metal even tried to overcome the level of $1,790 per 3 ounce, but failed. As is the case with the oil market participants are awaiting US inflation data. Until then, gold will hardly go far from 1,775. At the same time, yesterday's growth clearly hints at a further developments, considering that the inflation rate is expected to remain unchanged. A slowdown, gold will most likely begin to lose ground following the release of the US statistics. In fact, yesterday we witnessed the market's classic movement in the opposite direction from expectations. Signs of improvement in the US economy, such as a lower inflation, usually put pressure on the safe haven assets including gold, shaping the appeal. At a first glance, the situation with the ruble remains the same. However, the dollar-ruble pair is increasingly trying to fall below the mark of 60 rubles per dollar with no attempts to advance. This hints at ever-rising short interests, which may soon lead to the stronger ruble. If the government and the Bank of Russia do not take any steps to ease the existing restrictive measures as soon as possible, the dollar will tumble below 60 rubles per dollar and again hit for the mark of 50 rubles. And that's all for now. We continue to learn developments in financial markets. Subscribe to our channel and follow news with us. See you soon!